Welcome to the Federal Home Loan Bank of Chicago's Banking on Connections podcast. This is a special episode to celebrate the Federal Home Loan Bank Week, which is also the system's 94th anniversary. I'm David Feldhaus, Senior Vice President and Director of External Affairs for the bank. Today, we're lucky to have with us Michael Ericson, President and CEO of the Federal Home Loan Bank of Chicago, and Michelle Gross, Chair of the Federal Home Loan Bank of Chicago's Board of Directors, also Executive Vice President and Chief Operating Officer and Chairman of the Board of the State Bank of Vermont. And Michelle, you're also the Chair of the Council of Federal Home Loan Banks this year, which is the trade association representing all 11 federal home loan banks. So you're wearing a lot of hats today. So thank you for being here.
Thank you for having me.
So this week marks the 94th anniversary of the signing of the Federal Home Loan Bank Act by President Herbert Hoover. In 1932, the world looked very different financially. The Great Depression was in full force. Thousands of thrift institutions were failing. The congressional report at that time had specifically declared that homeownership is declining and we're drifting into a nation of tenants. So to address that, President Hoover recommended the establishment of a system of home loan discount banks as a necessary companion in our financial structure of the Federal Reserve banks and the federal land banks, to relieve the distressing pressures of home and farm property owners. So today, Michael, we're in a very different financial system than in 1932. Fortunately, the economy is much, much stronger, but the need for the home loan bank system and the value we provide is still strong. Can you talk about the differences today versus over time and how the home loan bank mission and membership has evolved over those 94 years?
Yeah, it's interesting in the history that you laid out with the creation of the home loan bank system back in 1932. And yeah, you're right. The system, the environment is much different today than what we had seen back in 1932, but there's a lot of similarities as well. So thinking about the differences back when we were created by Congress, the financial landscape, the financial institutions that were members of the home loan bank system were different than what we see today. So when we were created, certainly savings and loans, buildings and loan associations and other types of members that you see less of today, thrift institutions still are members of the home loan bank system, but certainly less in number. Over the years, Congress has expanded the membership of the home loan bank system to include credit unions, commercial banks, community development financial institutions. So the membership has expanded. But when we were created early on, it was savings and loan institutions, insurance companies that were really the backbone of mortgage lending within the United States. So the membership makeup has changed quite a bit, but overall, our mission has not changed from when we were created by Congress back in 1932, and that's to ensure that we provide liquidity into the housing, U.S. housing ecosystem in the United States itself. The another shift in how the home loan banks have evolved is the market dynamics and the financing transactions have changed, and the types of collateral that the federal home loan banks accept has also evolved through time. But by and large, the nexus of what we do, providing funding and liquidity through housing-related assets and collateral that is pledged to us, so 1 to 4 family mortgage loans and other types of commercial real estate, multifamily related assets, mortgage-backed securities, etc., form the backbone of how we provide liquidity to our member institutions today.
Thank you. And yeah, in addition to the types of collateral that's changed, it also has in some ways evolved the mission of the home loan banks, because now smaller community financial institutions can pledge small business loans and agribusiness loans in addition to the 1 to 4 family mortgages. So Michelle, your bank, the State Bank of Vermont, is a great example of a typical community bank member for the Chicago Home Loan Bank. How long has your bank been a member, and how do you use the home loan bank products to support your customers in Vermont and the surrounding areas?
Sure. So, in going back to how long we've been a member of the Home Loan Bank, we used to be a 3-bank holding company, and one of the charters in our holding company was bank number, I believe, 338. So we've been around with the system of Chicago for a long time. We utilize a lot of products. You mentioned the liquidity aspect. And so advances are one of the main products that the Federal Home Loan Bank of Chicago provides for us. We're an ag bank for a large part, but we also have other products and services that we provide to businesses. And so there's a lot of cyclical nature of what we do in our business, and having the availability of those advances to draw down at various times throughout the year is something that we depend on and count in our contingency planning every month. We've also utilized the Down Payment Plus program, which we probably granted between $100,000 and $200,000 over the past, I'd say, 8 years that we've been utilizing that grant program. And I will never forget one of my customers who I helped, she, her partner, daughter, and ailing father get into a home that, had they not had that down payment grant, would not have been able to purchase the home. And I can still remember the smile on her face when I told her, I'm going to be able to give you, I think at that time it was $6,000. And she was just thrilled.
And these small grants make a big difference, particularly in the rural areas, both in Illinois and
I
Wisconsin.
think at that time, her home, and she was purchasing from a foreclosure, I want to say her home was about $50,000. So, I mean, it was her down payment. And at that time, it was a huge step for her. In addition, staying on the housing side of things, we utilize the MPF program. We branched into a growing community in 2017. And at that time, we knew we were going to need to have long-term fixed rate mortgages and a program for that. We are small enough that we couldn't utilize Fannie and Freddie. It just wasn't going to be able to be utilized for us. But we wanted to be able to service our members, so I didn't want to sell the loans off either to a third party. So the MPF program gave us exactly what we needed. We were able to offer those programs, but yet still continue to service our member, and so our customers. And so we were able to, we can talk them through the beginning, work through the application process, service the loan throughout, refinance at some point, and keep, with that customer throughout the whole process. So it's been a wonderful program for us. And then finally, we utilize the letters of credit through the Federal Home Loan Bank of Chicago. And we utilize two different. We utilize a standard letter of credit as well as a fluctuating. We have one of our large depositors that is cyclical throughout the year. And so rather than being stuck with, say, a $10 million letter of credit for an entire year, we're able to draw that down or, take it back up when their deposits fluctuate throughout the year. So
these are like municipal
deposits, yes. And so it's another way. I know some banks maybe use securities to be able to offset that collateral that we need to be able to provide to the municipality over the $250,000 FDIC limit. This gives us some more flexibility in not having to pledge a security, and we can use our collateral that we pledge to the Federal Home Loan Bank with a letter of credit.
Yeah, you could pledge illiquid collateral otherwise and keep your liquid collateral for other means.
Yeah.
Which is our mission.
Exactly.
Well, and Michelle, you also mentioned being in an ag community. You've got customers that have seasonal credit needs.
Yes.
How does the Home Loan Bank help you support those local customers in terms of the seasonality?
Oh, so, in the cycle that we are in, typically our farmers are starting to borrow generally in March when they're getting ready to plant for their inputs, seed and fertilizer and other things. And then they continue to draw on those their loans throughout the year through harvest, usually coming in with large deposits to pay down end of the year, beginning of January timeframe. But we have other people that are needing those funds during that time. And so we're able to usually use short-term funding gaps for that needs to supply those funding gaps that we have throughout the year. So it's nice, again, the Home Loan Bank offers that flexibility, and it's always there that I can go out, we can look and see, all right, if we need a 3-month or we need a 6-month, we're able to do that. So it's in our contingency funding plan. We include all of that with the Home Loan Bank.
Thank you. And as I mentioned before, when setting up the Federal Home Loan Bank system, Congress and Herbert Hoover were looking to the Home Loan Banks as a model on the Federal Reserve Bank system to some extent. So, Michael, I know we've been talking, the Home Loan Bank system has been talking with the Federal Reserve Banks to try to increase the interoperability of
Yeah,
that system.
it's a tough word.
Well, and so and a lot of this stems from the bank failures a few years ago in March of 2023 with Silicon Valley Bank and a couple other large regional banks, and sort of exposed this need or a potential problem of member banks having a lot of their collateral tied up at the home loan banks, but then they need to borrow from the Federal Reserve banks at the discount window. Those Federal Reserve banks operate on a collateral basis, just like we do. Talk a little bit about how the home loan banks and the Federal Reserve banks have been working to try to overcome those issues and ensure that our members, when they really need that collateral and that liquidity, is going to be able to have that provided to them seamlessly.
Yeah. So the between the federal home loan banks and the Federal Reserve banks, we're very complementary to one another. We each have our own respective roles that we need to play in providing liquidity to our member institutions. Certainly, the Federal Reserve, when you think about the Federal Reserve banks and the role that they play, and the Federal Reserve in general, setting monetary policy is a key role for them. Access to the discount windows with the Federal Reserve banks are an important element of liquidity for very short-term liquidity for our member institutions. And the Federal Reserve plays a key role in that. And they also play a key role as a regulator of our member institutions as well. The home loan banks, we are certainly member-owned cooperatives, and we serve a role to ensure that we are providing liquidity to our member institutions through all economic cycles. And this is in good times as well as in stressful times. And so our role in providing that liquidity to our member institutions through all cycles itself, we are really a first responder to providing liquidity to our members when they need it. And we play a role up to a point where if there's certain times, off hours or other things where we need to have liquidity provided by other means. And that's where the Federal Reserve had stepped in this back in March of 2023, where it's especially noted in your comments. So there is a key role that the Federal Reserve has to play in a backstop capacity, but the Federal Home Loan Banks play a key role in being a first responder to the liquidity needs of our member institutions itself. So coming out of the regional banking crisis in March of 2023, we spent quite a bit of time working with the Federal Reserve, set up various work streams to ensure that there is a transfer of collateral, both in stress periods as well as in normal periods. I'm also looking at other means to ensure that we could be a continuum of liquidity between the home loan banks and the Federal Reserve banks, knowing that we each play a complementary role in providing liquidity to our member institutions.
So how long or when do you think something like that might be available to the members in terms of some changes that they might see?
I'm hopeful that as we work through the various work streams, we're coming to the final stages of them. We're working with various folks in the Federal Reserve as well. But I'm hopeful that through the course of the end of this year, we'll have much stronger alignment with our role in providing liquidity to members, as well as the Federal Reserve providing liquidity as well, and the transferring of collateral and other things of that nature.
It's an interesting but also complex issue. Obviously, there's 11 federal home loan banks. There's 12 Federal Reserve banks. Each bank is separate. So working all of this out through all of the combined entities can be a little tricky, a little time consuming, but I think it sounds like you're making progress.
Yeah, we're making progress. The other interesting thing too is each of the federal home loan banks, there's 11 federal home loan banks, each have a different defined district, which is different than the Federal Reserve. And so oftentimes you have to work through multiple Federal Reserve banks, and the Federal Reserve has to work through multiple federal home loan banks on similar issues. So
we're a little easier because at least our districts follow state lines. So it's a little easier to understand which home loan bank district you're in versus some of the Federal Reserve Bank districts. You know, it's occurred to me we're talking a lot about liquidity. We use that term a lot. But for some of the audience members, they may not fully understand what that word actually means. For both of you, Michelle, what does liquidity mean for you in terms, and how would you describe that to somebody who's maybe not as familiar, not in the financial services industry, just the value of liquidity and what that actually means for the typical businesses and communities?
So liquidity to me means being able to provide funding to our various small businesses, our homeowners, people who are wanting to buy homes. It's us, normally we take in deposits, but if we don't have enough deposits, we need to have liquidity. We need to be able to have some place that we can get to be able to provide that liquidity to our customers. So it's probably not the best way to describe liquidity, but
No, that's great. Michael, what are your thoughts?
Liquidity is always it's always a tricky one to answer, but with liquidity, it's access to funds. And when I think of liquidity, it's immediate access to funds. And for member institutions, when they need liquidity, they need it today. They need it now. And so we need to be able, as a home loan bank, be able to access funds for our member institutions and do that quickly. And the Federal Home Loan Banks, we're very fortunate. We're able to have deep access into the capital markets or the debt markets. So every day, the Federal Home Loan Banks are issuing billions of dollars in debt into the capital markets. Investors purchase our debt, and in turn, we use those funds to pass through to our member institutions to provide them funding to meet their liquidity or funding needs on their balance sheet. And we do this seamlessly day in and day out. And one of the things that is important for us when we think about liquidity, we need to be stable and we need to be reliable. We need to be there every day for our member institutions. That's our mission. And that's how we carry that out. So I think you always use an analogy of we've got to be the plumbing. So we're the plumbing behind the walls that ensure that the U.S. housing and the U.S. financial ecosystem is always working, functioning, and effective.
You mentioned an important word, reliable, because the home loan banks are set up to ensure that the members have access when other forms of liquidity might not be there because of the economic conditions. Talk about how do we ensure that the home loan bank funding will be there for members when they need it, in addition to the everyday uses of liquidity that they use.
Yeah, there's really two ways in which I think about it. First, we need to ensure that we have sufficient or significant on-balance sheet liquidity. And so on our own balance sheet at the Federal Home Loan Bank of Chicago, we need to ensure that we're able to convert investments and other things to dollars quickly to our member institutions so that we are providing our liquidity back to our members. The second area that we have access to liquidity is through the debt markets, and we need to be able to issue debt day in, day out to provide that liquidity to members as well. And we see that in various economic cycles where there is stress in the financial system where we're able to access debt more readily than maybe our member institutions are. And so you hear like this flight to quality typically in times of stress. And this is where investors want to invest in high quality paper that they can rely on. So it's typically the Federal Home Loan Banks, the U.S. Treasury, those institutions, investors look to us for investment dollars to put their money at work, and we're able to access that to then provide that funding advantage back to our member institutions. What's critical about this is that our members are able, through the access to the debt markets that we are able to pass along our funding advantage to our member institutions, and they are able to get low-cost funding from us. And they're in turn able to provide low-cost funding back to their individual borrowers. So these individual borrowers would be U.S. home buyers in that regard, or people that have mortgage loans, commercial real estate loans, and other things. So that funding advantage goes back to those individual customers, you and me, for example, that allow for affordability in a way that you wouldn't see otherwise.
So, as mentioned, the failure of the Silicon Valley Bank and other banks at that time, a couple of years ago, really exposed the changing nature of financial services, of how money can be demanded during the weekends and after business hours. Going back, so as a result of those that issues, is the home loan bank. What changes have we made to ensure that we have that liquidity when the members need it?
Yeah, a couple of areas. One is to ensure that we have significant on-balance sheet liquidity in order to meet the members' demands.
So we're just
But
carrying more
we're carrying more
liquidity than we
liquidity.
did prior.
Absolutely. We have more liquidity on our balance sheet today, and ensure that we can meet the ongoing demands of our member institutions. So that's a critical element of how we are supporting our members. But you raise an interesting point. The speed at which the markets are moving is much faster today. And so we need to be able to react much more quickly and ensure that we have not only the funding available, but meet the needs throughout the day as well. We're seeing this evolve, and we'll need to be evolving as the payment system starts to evolve as well. But yeah, the movement to 24/7 payments and always being on, we need to ensure that we have liquidity for our member institutions through their needs as well. And as their needs are evolving, we need to continue to look at how we need to evolve with that.
Michelle, are you seeing that from your customers too? It's more of a demand for financial services at all times of the day, even on weekends or at nighttime?
I wouldn't say it's so much the financial, I mean, we have requests for loans during the weekend that we can approve, but, because Fed's not open, you can't wire funds out right now during the weekend. The one thing I will say, though, is, pre-qual letters and things like that. And we have to be able to be really on demand and have done a lot more in the technology space to assist with that. But from the liquidity standpoint, over a weekend, we'd be fine just because Fed isn't open. And so that kind of hampers us. I'm sure at some point Fed's going to have to change and be more available.
Yeah, and I think they're working on trying to get those payment rails to be more of a 24/7 environment because that's just, again, what consumers are demanding in this age.
And we, have our core systems have had to definitely stay up to snuff, so to speak, with technology so that we are completely fully integrated. So when a customer makes a transaction, they can look on their phone and see this is what I have available now.
Right.
So
let me talk a little bit about one of the real pressing issues facing the country today, and that's the cost of housing and the lack of affordable housing or housing affordability throughout the country. That's certainly an issue that many folks in Washington, D.C. are focused on. But for both of you, how does our leadership team and our board of directors view that issue and how the Home Loan Bank's liquidity mission can support and connect to trying to address the housing affordability issues that we face today? Let me start with you, Michael.
Sure. You're 100% spot on that housing supply is a major issue within the United States. It's something that we at the Federal Home Loan Bank of Chicago take very seriously, and especially as our role not only in providing liquidity to our members, but also to meet the housing needs that are in our district itself. So we've looked at housing supply as a big area of strategic focus, an important area of focus itself. When I think about our mission first and foremost is to provide liquidity to our member institutions and ensuring that we are passing along our funding advantage to our members. And that is critical, a key piece of ensuring that as we're passing along our funding advantage to our members, they are passing along that low-cost funding to their individual customers and borrowers. That helps to drive down mortgage rates in general. The access to liquidity itself allows for lower mortgage rates, lower borrowing rates in general for the retail loans and as well. So all of that is a positive in helping to drive down overall costs in the marketplace. When I think about supply and addressing housing supply related issues, a key area is our affordable housing program, where we do provide a significant amount of dollars to support affordable housing construction in general. So the 10% of our earnings go into affordable housing related projects and initiatives. In addition, the board has committed to do more in affordable housing, and we've contributed 10% more above and beyond what's statutorily required into various voluntary programs to help address many of the housing supply related issues that we're seeing in our district. And Michelle, I'll let you expand upon other things that we're doing within the Federal Home Loan Bank.
From the board's perspective, Michelle, how does the board look at this, the issue, both on the affordability side and the support for the community investment programs, the voluntary programs?
The board is behind this 110% probably. I mean, we feel that this is very important throughout our region to make sure that our district, both in Illinois and Wisconsin, that our members have what they need to be able to service this side of the business. And so, not only Michael mentioned the affordable housing, but we have the developer programs that help the developers. And it was exciting in one of our most recent meetings to see that those projects or those programs are filtering all the way north Wisconsin and to southern Illinois. So seeing those programs expand across our region is really exciting, especially as a director, to be able to see the outreach that we are doing and the monies that are getting out into our district is wonderful. When you think about the board discussions and when the community investment group came to us about more dollars in these, there was not one pushback. I mean, if anything, our board is willing to help facilitate and use this money to good for our region, for our district. The MPF program, the Habitat for Humanity, is another new program that's come out with us too, where we can help the Habitat for Humanity programs throughout our district and offer discounted mortgage loans for the Habitat for Humanity. And that's just one newer program that we introduced.
Yeah, I was going to say the Chicago Bank has always been, I think, focused on housing and home ownership and been a leader in that in the home loan bank system, but primarily through the creation of the Mortgage Partnership Finance Program. Your bank uses that, Michelle, and
Yes.
you mentioned now the MPF Habitat for Humanity program as well. Talk a little bit about how your bank views the MPF program and how does that help you support your local home buying customers?
So again, we want to be able to provide those long-term fixed rate mortgages for our customers. Before, we always had 7-year balloons, and that was pretty much the standard. You could maybe stretch it to a 10, but it was a 7-year balloon, and then they reprice.
And you just held those loans on your
on our
books.
balance sheet, exactly. But for the customer at 7 years, they don't know exactly what their payment will be. And so there's, a little bit of hesitancy, but if they want to get into a home, that's what we provided for them. So to be able to offer a 15-year or 30-year in most cases, they're going to know exactly what their payment is on the principal and interest side. Obviously, taxes and insurance are different, but
Sure.
they're going to know exactly what that payment's going to be for the life of the loan. And, through the Federal Home Loan Bank of Chicago's program, we're able to, again, service those customers. So they stay with us. We are able to help them through escrow. We take their payments. If they have problems, we can help them. They'll call us. We're
Yeah.
the ones that'll help them through any
That's-
potential problem.
That's so important because people, I think a lot of times home buyers get very frustrated when their loan gets sold
Yep.
to somebody else. They need to send their mortgage payments some new address, but more than anything, they don't know who to contact if they do have a problem. Here, they get to continue to work with their local bank.
Exactly.
So, really valuable. So let's turn a little bit. Michelle, as the chairwoman of the Council of Federal Home Loan Banks, that has represented the home loan banks now in Washington, D.C. for over 20 years. But 4 years ago, roughly, the council was a little bit reimagined and I think re-energized as the public face of the system. What changes have you seen in the recent years as the council has tried to be more proactive in telling our story and trying to really make a difference for our members throughout the district?
I don't think that our normal customers, even probably legislators, really understand the Federal Home Loan Bank. And so I think that is one of the best things the council has done, is to elevate what the Federal Home Loan Bank does throughout the United States, in all honesty. Having the leadership within the council that is helping, as well as all of the banks, to provide these stories so that everybody can really understand, whether it's through liquidity purposes and advances or grant programs or the mortgage finance program. Everybody understands how the Home Loan Bank is able to continue moving money and help the economy. throughout. And I think that's really important.
And Michael, you've got a unique role among the Home Loan Bank presidents as the chair of the Public Policy and Legislative Committee that works very closely with the Council of Home Loan Banks. From your perspective, how have you seen the changes in the council over the last couple of years? Where do you see this moving forward as we continue to evolve?
Yeah, I think Michelle, you hit on a lot of the changes that have occurred with the council itself. The biggest couple of changes that I've seen and how I think this will continue to evolve, first and foremost, the focus on advocacy and advocacy efforts in general has been outstanding. And they've been doing that with one voice. And I know that with 11 banks, you can have 11 different voices, but with the council representing the 11 federal home loan banks, we're coming across as one voice. And that's important, especially when you're dealing with key stakeholders in Capitol Hill, as well as other trade associations and other groups as well. So having one voice, speaking of the system, speaking about our mission, and really providing that outreach on a much more proactive basis has been outstanding. We've been also more proactive in telling our story and highlighting the impact that we've had through various communication channels and increase that visibility through social media and other means. And I think that has also been very important, especially as there's been much more attention and spotlight put on the federal home loan banks and doing more. We've demonstrated continuously that, yes, we are doing more, and we're doing more to support our member institutions, supporting housing, supporting liquidity, and getting that message understood has been really important. The other big area of focus has been in research, and we've done a lot more outreach to really look at the impact that the home loan bank system has in providing stability to the U.S. housing markets and the U.S. financial system as a whole. And there's been a number of reports that have come out. The GAO has issued several reports on the federal home loan bank system, really complimentary on the work that we have done in providing stability and focus on our mission. We've had the Urban Institute do 3 different reports on the home loan bank system itself, highlighting the important role that we play in housing finance and the stability that we provide to the housing financial system. So very positive messaging, but the research will continue, and we'll need to continue to build upon that to really tell the story of the home loan banks, because as Michelle, as you pointed out, we're not necessarily well understood by many folks in DC, and getting that message, clearly articulated is very important. So the continued research in the future as well. Those are the big areas of focus within the council, and how we'll continue to move this forward.
Yes, if we don't tell our story, nobody else will.
Or if they tell it, they won't tell it but the correct way, right? And how, the system helps normal Joe.
That's right. We've got to talk about how we're making the impact throughout the district, and talk about connecting our activities to the constituents for policymakers so they really understand it. So I know we're wrapping up here, but as we think we're at 94 years now for the system, a few more years, we'll get to 100 years or so. How do you see, both of you, how do you see the system continuing to evolve, and particularly given the challenges that are facing smaller institutions today, from technology, AI, cybersecurity, et cetera? There's a lot of challenges facing those smaller institutions. How can the home loan bank system continue to support their liquidity needs in this ever-changing financial services industry?
And I think Michael kind of touched on this a little bit earlier. We're going to have to continue to evolve, both me as a member institution, as well as the home loan bank and the system overall. We know things are going to be changing in the future. This 24/7 model is going to become reality at some point. How fast that happens, I'm not sure. But we, as the members, from the board standpoint, as well as the banks, are going to have to continue to look at ways that we can, that we stay relevant and continue to help the communities across the United States.
Michael, what are your thoughts?
Yeah, I think it's important for the home loan banks to stay anchored in the mission that we have been chartered with, and ensuring that we are always there to provide stable, reliable liquidity to our member institutions through all economic cycles. And we need to stay anchored to that because the environment around us will continue to evolve. And so we need to stay anchored to those principles. And we also need to stay focused on what are we doing to support housing and community development holistically, and stay focused on that as well, and evolve as the market and the needs evolve. When I think about how the system will evolve over time, I do think that there is a modernization effort that we'll need to undertake, both from a technology and infrastructure perspective. We'll need to continue to evolve as collateral requirements change, as the market dynamics change, as we think about tokenization of assets and other things of that nature. How do we evolve as a system to stay relevant as maybe the financial instruments change? We still need to stay anchored, fulfilling our mission, providing reliable, stable liquidity to our member institutions. And I think if we stay anchored on that, that principle will still evolve as we need to evolve to meet the changing needs of our members and the changing environment that we face.
Well, great. Thank you, both of you. It's been a fascinating discussion, and we're so happy you're here to help us celebrate the Federal Home Loan Bank Week and our anniversary. I don't know if we have some cake afterwards to celebrate with, maybe some few balloons, but really appreciate your time and spending to talk, and we look forward to the next seeing you in the next podcast with Banking and Connections.
The Federal Home Loan Bank of Chicago is providing this podcast for informational purposes only. This podcast does not constitute professional advice or an interpretation of Federal Home Loan Bank of Chicago policies. The views expressed by any guests are their own, and their appearance on this program does not imply an endorsement of them or any entity they represent.